Crypto platform Binance acknowledging a storage mistake that found some of its collateral coins mixed in with customer funds.
So today, Binance admitted this mistake where they mix collateral for their own tokens that they issue with customer funds.
Kevin O'Leary, who was a former FTX spokesperson, always maintained that Binance was running the same fraud FTX was involved in before FTX got exposed last November. A lot has been happening recently which places a lot of question marks on the world's largest crypto exchange, Binance. Is CZ another SBF? This interview reveals a lot from Kevin O'Leary's perspective, so let's listen to what he has to say and analyze his claims.
We went back and looked at the volatility of our portfolio pre-FTX and now post-FTX. We had 32 positions on pre-FTX collapse. We now have 7. And we're getting the exact same volatility with a fraction of the actual number of tickers. So you don't need to own everything to be exposed to crypto volatility, whether you believe it's to the upside or downside. And that's the other shoe to drop. 10,000 tokens, most of them worthless. They'll eventually just go to zero because of lack of volatility and lack of volume. They're irrelevant. And so that will also be flushed out of the market. So all of this crap will be scraped like the patina off rusted iron with a spatula from the sky. And I think it's great. In the interim, to bring back our allocation, we simply went into the market and bought new positions in Bitcoin, Polygon, Ethereum, HBAR, just a few, 7 positions. And we've noted, and we've gone back and tracked, because we mark to market every 24-hour cycle. You don't need any more than 7. You're getting the same volatility.
After the FTX collapse, we know the sledgehammer of regulation would fall heavily on cryptocurrencies, and somehow Binance was already at the center of the storm from the very beginning. The SEC clampdown on the Binance token BUSD is sending the first shockwaves of what regulation would do. BUSD is a stablecoin that is backed by $16 billion U.S. Treasuries, but that may not be enough to save the Binance token. The New York Department of Financial Services, or NYDFS, has ordered Paxos, which is the company issuing the BUSD token, to stop. This has led CZ, the CEO of Binance, to explain the situation on his Twitter handle. He says the token is not minted and issued by Binance, but by Paxos, clearly stating that the Binance USD token belongs to Paxos and not Binance. This situation has led Binance users to withdraw about $1 billion already. This may be the beginning of a huge wipeout. CZ admits in a follow-up tweet that this would see the market cap of BUSD tokens diminish. A lot of other cryptocurrencies would surely follow as the regulators continue to crack down on crypto. Kevin speaks further on this.
Unregulated exchanges that issue tokens as faux equity or fake equity. And this was done often. FTX did it, Binance does it, to entice you to buy these tokens to get trading credits on the platform. The regulator really doesn't like that at all. And indeed, those tokens, the FTT tokens, were the downfall or the final knife in the back of FTX, $550 million forced down their throat the week of November 6th, which caused no choice but a bankruptcy. And whether or not these alleged frauds are discovered the way everybody's speculating, that'll come out in court. But there's another giant token out there, BNB, and that's worth about $64 billion. Or is it? And what's it backed up by? And who's auditing it? Where's the transparency? And so it's not clear what the next shoe is to drop. And since you and I last talked, there's been multiple bankruptcies, and the last was Genesis last week. I speculate that there'll be many more. We're not done here. There's so much garbage still floating around in crypto that has to be flushed out of the market. And then I think what'll happen is we'll come out of the ashes like a phoenix rising with what the merit is of crypto, the potential of crypto. After all, crypto is just software. There's nothing nefarious about software. It's all the bad actors and fraudsters and all this stuff that have caused this debacle. But I believe that in the next 5 years, this will be the 12th sector of the economy. However, with one caveat since we last talked, most of the players that you know today that make up the crypto market won't be here because they have no idea on how to make market or make money even in a regulated environment. And so when they have to face the realities and the costs and the burden of regulatory compliance, they won't survive. And so there'll be a whole new cast of characters that come in that are more used to working within a regulated environment and bearing the cost of those and knowing how to run a business under the scrutiny of regulation. That's the transition we're going to make. That was a long answer, but that's exactly where we are today in crypto. We've got a long way to go to flush out the garbage.
According to Reuters, Binance US moved about $400 million in funds from its Silvergate bank account to Merit Peak Trading. This is not a good sign and does not inspire confidence in Binance investors and customers. But it gets even worse. We are now realizing that Binance actually had access to its US account, which was supposed to be independently managed to prevent shady interference from Binance. But it was a lie. Binance transferred large amounts of money to the trading firm Merit Peak Limited from a bank account belonging to its purportedly independent U.S. partner, according to Reuters. Essentially, CZ, the CEO of Binance, had full access to the company's funds and collateral, which is fraudulent and similar to the unfiltered access SBF also had to FTX funds. This is having a negative impact on the reputation of cryptocurrencies.
There is no institutional interest in crypto. For all of the talk about Bitcoin and the excitement of institutions, they own none of it. They still own none of it because they can't buy it. There's no compliance platform for them to do it on, and their compliance departments won't let them. And the FTX debacle hasn't helped that situation. So we're a long way off to having price appreciation because virtually it's just high net worth individuals, hedge funds, rogue traders, retail investors. There's just not that much interest in crypto right now. I don't think there will be much room in the next 36 months. They'll be squeezed out of existence. And that's exactly what the regulators want. The institutional hedge fund is a rounding error. These funds are sort of $150, $200 million, which may sound like a lot of money, but it's irrelevant.
Nothing.
Completely irrelevant. And so what they do or don't do just doesn't matter. What we need is an allocation of 1% to 3% with sovereign wealth and pension. Then you'll start to see price appreciation.
Before cryptocurrencies can have a significant rally, it would need funding from institutional investors. But it's obvious that the market still has a lot of bad actors operating in it, and the government wants to have a stranglehold on the market. How will it play out? To follow developments in this story, subscribe to the channel. Adios, and thanks for watching.